Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 15th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And you can tell it's a Friday. I say that because I think we've seen what looks like book squaring or profit taking ahead of the weekend. You can see that both the Australian dollar and the New Zealand dollar have given a bit of ground back to their US rival, the Aussie coming down by 0.2% against the US dollar. The Kiwi falling back by 0.11%. I think traders have just taken some money off the table here ahead of the weekend. And a similar story, I feel, in the US dollar Brazilian real. The dollar is weakened by 0.83% against the Brazilian real. Well, I think again that's just people taking some money off the table ahead of the weekend after a reasonable run in the dollar there. Dollar index for its part trading at 97.05 shortly before we recorded the video. Unchanged really over the course of yesterday's session and this morning, but up by 0.43% over the last 7 days. So the trending dollar is trending higher still as we go into the weekend. Okay, what's on the calendar? Events that may move the markets today. A pretty light calendar in terms of the number of releases. We've already had some interesting data out of Asia though. We had consumer price index and producer price index data for January out of China, and we'll look at the producer price index data a little later on in the video. We also saw industrial production data for December out of Japan. Not the greatest looking number as far as the headline read is concerned, down by minus 1.9%. However, that was in line with forecasts and with the previous read. So on to data that's coming out later today at 9:30 GMT. We'll have retail sales both month on month and year on year for the month of January out of the UK. How are UK consumers faring? Did they overspend at Christmas? Were they reluctant to spend money in January? We shall soon know. At 1300 today, we'll have the first of the day's central banker speeches, this one from the ECB's Benoit Curve. And then at 14:15 GMT, we cross over the Atlantic for industrial production data out of the USA for the month of January. At 14:55, that's followed by the second of our central banker speeches today, Fed member Bostic speaking then. And at 1500, the Michigan Consumer Sentiment Index release for the month of February, also out of the USA. Okay then, breaking news and comment that's caught my eye overnight. First of all, trade talks between the US and China continue today in Beijing, though with few signs of any progress. Asian equities have traded lower overnight on concerns about global trade and the outlook for growth in 2019. And they were pretty right to do so, as PPI, or factory gate inflation, grew by just 0.1% year over year in China during the month of January. This was the slowest growth in this measure for some 28 months. And when you think about inflation, particularly factory gate inflation, as a sign of excess demand, this reading here suggests there's precious little of that around at the moment in China. Meanwhile, Donald Trump may declare a state of emergency today at the US-Mexican border, and if he does, he will undercut Congress's oversight of the funding for a wall, so he can go round Congress and secure his money from other sources to build a wall, if he so wishes, should he declare that state of emergency. Okay then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Much is being made of our move towards EVs, or electric vehicles. However, we need to make some major changes to our infrastructure and methods of power generation before we can claim any green credentials. And this is a chart taken from a Twitter stream and blog called The Long View. The data is a little out of date, 2016 data, but it shows the sources of electricity generation within the United States. As you can see, 30.4% at that point of all power generation came from coal, 33.8% from natural gas. So there's still a heavy reliance on fossil fuels. Nuclear, of course, is in there as well. That won't really please many green activists. And it's this area here, renewables, wind, biomass, solar, etc., that needs to be increased before we can make any environmental claims, I fear, over electric vehicles. Okay, time to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representatives. We'll be happy to take you through those. And do take the time, please, to read this risk warning thoroughly. Thank you very much for your time today.